very good evening. You're watching Beyond the Headline. I'm Tamanna Inamdar. GDP or gross domestic product data was put out today by the government for the last financial year and the fourth quarter. Now, you've probably seen the numbers by now. 8.7%, which is the rate at which India grew between April 2021 to March 2022, and 4.1%, the rate at which the economy grew in quarter four. By quarter four, I mean between January 2022 to March 2022. Now, what do these numbers actually mean? How does it impact you, and why should you care? That is what I'm attempting to break down this evening. Let's begin with what GDP actually is. It's effectively a measure of all the monetary value of goods and services that a country produces. Everything that we produce in a year is calculated within the GDP. Now, the basics are in place. Let's get to what has happened. The GDP data is put out for every quarter, that is a period of 3 months. In India, the numbers for the last full year, that is 4 quarters, have been in quarter 1, 20.1%, quarter 2, 8.5%, growth 5.4% in Q3 and 4.1% in Q4. Now look at those numbers carefully. We're seeing a drop in quarterly growth from the first to the fourth quarter. The hit in Q4, where you see that 4.1% figure, is because of many factors, like you had the Omicron wave in January, then you had a war between Russia and Ukraine. Because of this, crude prices jumped up and caused massive inflation. You had crude prices going up massively to almost $130 a barrel. But does that mean that we were doing very well in Q1? I want to go back to that plate, please, where we were showing you the 4 quarters. So let's go back to it and look at what's happened in quarter 1, where you saw that 20.1% figure. So does it mean we've done badly in Q4 and very well in Q1? Not necessarily. Here is why we need to account for something called base effect. So the next time someone tells you that the GDP number is good or the GDP number is bad, because you'll see a lot of WhatsApp forwards right about now on how we've done very well or very badly. The question you should ask is good or bad compared to what? So here, let me come to the full year figure to give you a bit of more understanding of what I mean. So for the full year, the full financial year, and we count that from April to March, India grew at 8.7%. The earlier estimate was 8.9%, so slightly lower. Even so, 8.7% by itself is a great figure. And you'll probably see that. People will be comparing this to what happened in the US, what happened in China, and say, hey, we grew at 8.7%. Now, you need to place that number in perspective. You see that we grew 8.7%, and look at that bar carefully, compared to a contraction of the GDP to 6.6% last year. So, yes, it's an improvement, but it would be too early to say that the Indian economy is performing as strongly as it can. The question then, and here's the important one, is why should you care about all of this? It's a valid question. So thank you for staying on so far if you have. The reason you should care for this number of GDP is that it gives you an indication of how the economy is performing. A strong economy means more demand for goods and services. That means more companies will invest, expand their businesses. This will lead to more jobs available. This will give people more income and even greater demand. That cycle continues. Of course, a lower GDP means just the opposite. This is why GDP impacts your life, in how much you will potentially make next year. Will there be better job opportunities? Even questions like, does the country have enough money to invest in important things like health, infrastructure, education, roads? So on this parameter, how do we fare? I will bring you 2 important voices today. First, we're speaking with Pronab Sen, former Chief Statistician of India, and I'll also play out for you an interview I've done with Arvind Panagariya, who is the first VC of the NITI Aayog, a little while later. Let me first come to Mr. Sen. Thank you so much, sir, for speaking with us this evening on Beyond the Headline. We are attempting here to explain to people what this GDP number really means and why it matters to them. Now, already we're seeing different spins to this number. Some saying it's terrible, some saying it's very good. Look how well India has done. How would you place it?
As you said, Tamanna, it's all about context. So let's talk about context. We know that 2020-21 was a terrible year because of the pandemic and the lockdown and so on, right? The real question is, where do we stand today vis-a-vis 2 years back, which is 1920? And where we stand is that our per person income is about 2% below what it was 2 years ago. So our incomes, as the average Indian's income, has not gone back to the pre-pandemic level. The average Indian's consumption is even worse. So we are not out of the woods as yet. So now, if you look at it that way, as you rightly said, 8.7 looks very good. We can tom-tom it, but it has to be seen in the context of the minus 6.6 of last year, which is one of the worst in the world.
Right.
But that's not the point in terms of how it matters to each of us as citizens of this country. Is where is our income, where is our consumption relative to what we used to have? And we are still below.
Let me put it in a wider angle. So we know that we fared poorly during the COVID-19 pandemic. Countries around the world fared poorly, perhaps because we had a very stringent lockdown. Our number, as you said, was badly hit. My question is, are we at least back to the pre-pandemic level? And I'm just going to ask them to pull up that bar graph showing the last few years so that they understand what you're talking about. Are we at least back to the pre-pandemic number? Because that's important, isn't it?
Yes. So we are back to in fact, we are above the pre-pandemic level. We are above the pre-pandemic level, certainly, by about 1.5%. But in the meantime, our population has grown by about 3.5%, which means each of us is about 2 percentage points lower than what we used to be.
Okay. So we are doing better than the pre-pandemic level, but since our population has grown, so factors like your per capita income get impacted. Now, in all of this mix, Dr. Sen, let me add inflation. And that's the big one, isn't it? Yeah. That's what is hurting us and is going to continue to hurt us?
Yes, inflation is a problem. But let's also be very clear, which is that a certain amount of inflation is actually good. It encourages investment, it encourages growth. And historically, what we found is that up to about 6.5% inflation, we can tolerate. And in fact, there are times when we should, in fact, welcome it. When it breaches that limit, then it starts hurting. And it then can start hurting very badly. And that's where we are at the moment. And inflation is now well over 7%. The way it hurts us is obviously, first of all, that any part of our economy where incomes are not growing as fast as the inflation is seeing a reduction in its purchasing power. But then there are parts of the economy where the incomes are actually growing faster. For them, it doesn't matter so much. But the big problem with inflation, Tamanna, and this is what people don't understand, is that inflation creates a huge uncertainty about the future. You don't know what to plan for in terms of what's going to happen. Will inflation continue at 7.5%? Will it come down to 4%? Depending on which way it goes, your reaction would be different.
Okay.
And what ends up happening with increased uncertainty are two things. First of all, each of us as households, as consumers, we try to protect ourselves by actually increasing our savings and consuming less today because we don't know how much we will need for tomorrow. The second thing that happens is investors are wary. They don't want to invest until they're very clear about what is going to be happening going forward. If they start investing today and somebody comes in a little later, they could get outcompeted. So inflation is bad both for consumption and investment, and therefore it's bad for growth.
Okay, now some would say, sir, that we're being very pessimistic. The fact is that Indian agriculture has shown resilience. The fact is that despite high crude prices, despite 3 bouts of COVID-19, you still have a decent amount of domestic consumption. The fact is that we are growing at least. And we have a huge economy, which, we have no issues with food shortages right now, so to speak. So there are a lot of things going for us as well. How would you respond to some of those things? Because for some reason now, even something like GDP has become a very emotive issue where there are sides being taken, even though it's statistics at the end of the day. But I must ask you, what would you say to those who today are saying, please look at the positives in those numbers and cheer on India's resilience?
No. Look, Tamanna, by all means, we look at the positives. We should look at the positives. But the point is that the job of an economist is not to play up the positives. That's the political angle. The job of a professional economist is to try and inform the policymakers about what the dangers are in the future. If we don't do that, we as economists are not doing our job. So an economist by training is a pessimist. So I was trying to point out the dangers that we have to guard against, rather than go into a mode where everything is going great.
Right. That's
because
important.
then we are going to face shocks which we were not prepared for.
So let me just get your view, since I have you here, sir, on some of the measures that the government has taken recently. And I'm jumping back to inflation on this, because that's the pressing worry. Excise duty cuts, some custom duty rationalizations, some stops on exports of sugar, wheat, etc. Do you think all of these will have a quick impact in cooling inflation?
No, they won't have a quick impact. Inflation, once it starts as a process, there are no quick solutions. It takes anywhere from 3 to 6 quarters for effects to be felt. What the government has done on the fiscal side is very good. My grouse as an economist is that the RBI has waited for too long. The RBI should have acted much earlier. Perhaps we would not have been in this situation then. So what the government has done is fine. The real question is, will we give it enough time to work its way through the system? And the time that we are talking about is at least the next 2 to 3 quarters. You should, in fact, expect inflation to go up a little bit before it starts tapering.
That's the next big figure we need to look at. Thank you so much, Pronab Sen, for joining us and putting into perspective the headline that we've seen today about GDP growth in the full year and the fourth quarter. We're telling people why it matters to them, why they should look at these numbers, and they should ask good or bad compared to what. Thank you. Let me just play out for you a comment today from the Chief Economic Advisor, who spoke after these numbers were put out.
I mentioned it in my presentation as well. The Indian financial sector is in far better health than before. And that is other reason why India is better placed than other countries. Our external debt is extremely low. So we are not looking at exchange rates, making our external debt servicing more expensive compared to others, etc. These are the 3-4 factors that I would say distinguish India for the better compared to other countries.
All right, so we've tried to get you a lot of different perspectives today on the show when we're talking about this GDP number and what it means and why you should care. Let me play out for you this conversation I had with Dr. Arvind Panagariya. He was the first vice chairman of the NITI Aayog and is a professor of economics at Columbia University. I began by asking him to put into perspective the numbers we've seen today. Let me begin by your first cut. Your first slice of the numbers that have come in.
Thank you, Tamanna, for having me. I think, there are no surprises. If anything, on the whole, I see good news because the recovery seems to be quite, wide, meaning, it covers almost every sector of the economy showing recovery. There had been these, reservations about private consumption and fears expressed that private consumption demand had still not come back to the pre-pandemic level. But that also has come to pre-pandemic level, and so also the fixed investment and, of course, the government expenditure. So I think, and sectorally also we can speak about that, but sectorally also growth rates have been quite, the base is quite wide. Nearly every sector is showing recovery. So I think that is the part I see as being very welcome. It just speaks to the general strength of the economy, that it's not being driven by one or two sectors alone. It is fairly kind of broad-based.
But, we're also looking at the GDP numbers in the context of FY21, which was badly hit by the impact of the pandemic, second wave, so on and so forth. So you're seeing an 8.7% growth on a contraction of 6.6%. How would you contextualize that, sir?
Well, you see, first of all, because the economy contracted in 2021, and by a fair bit of amount, 6.6%, we do see the growth rate to be elevated, 8.7%. So there is clearly a very strong base effect. So that sort of is the dampener side of, that is the pessimistic side of the 8.7% figure. But the optimistic side of that figure is that that the effect of the pandemic has continued in the 21-22 year as well, and yet we have certainly returned the GDP levels, sectoral output levels, pretty much to the pre-pandemic level. So that is the good news, that the recovery has been as robust as was the hit from the Delta wave in the previous fiscal year, that is 2021.
Would it be fair to say that India has now pretty much managed to come back to pre-pandemic levels of growth, and this gives us a strong base to move forward, all things considered?
Fingers crossed, yes, because for 2 years this virus has ravaged the entire globe, and one hopes that finally we are seeing the end of it. And unexpectedly, we also got hit, by another kind of external shock, which is the war between Ukraine and Russia. Unexpected things have happened, but they are not sort of more or less known, both factors. We have some sense of, what they look like. So I'm willing to bet on the next year being quite good.
Let's go into some of the details or the internals as we have seen. Would it be fair to say that manufacturing continues to be a cause of concern? And in terms of, contextualizing this with the employment issue for India, that's a big question mark, because a lot of employment in the country is generated from manufacturing, and manufacturing numbers have not shown the pickup one would have hoped for.
Well, Tamanna, for me, manufacturing has always been an issue in India. Because, as you said rightly, that is where good jobs for the masses can be created. in the services for the masses, the jobs that get created are not so well paid. And it is manufacturing which can do that. Certainly that has been the experience of all the countries that have successfully transformed from South Korea to Singapore to Taiwan and then to China. And in India, we have not seen that. Now even Bangladesh and Vietnam actually are creating good, decent jobs for the masses in manufacturing, but we have not done that. I think that's a long-term issue which continues with us. Within our own context, the 9.9% growth in 2022 that we have seen after a decline of 0.6% in the previous year is a healthy thing to have happened. So within, seen within the context of the last 2 years, I'm not so unhappy, but we certainly need to do something on the manufacturing front, particularly in terms of the labor-intensive manufacturing, which seems to get neglected, by the businessmen, by the policymakers, by everybody. The headlines always get grabbed by the IT industry, the high-tech industries, but that's not where the good jobs are for the masses.
All right, let's